Hi, my name is Danielle. This week I will be doing homework number 1, exercise 11-4 for you today. If you look, I did create an Excel sheet that has all the information pulled across from the Wiley Plus materials to walk through with it. So the first question that you have to ask is, what are you getting out of the transaction? The transaction is that Shamrock Incorporated is issuing 8,000 shares of $108 par value preferred stock for cash at $111 per share. What that means is that we'll have preferred stock and that we'll have paid in capital in excess of par value preferred stock. So the first thing you have to decide is, what are we receiving out of the transaction? In this case, we're receiving cash. And the total amount of cash is going to be equal to the number of shares times the value that were paid for that. So in this case, it's $111. So 8,000 times $111 will give us a cash influx of $888,000. The next part of this question is to break down or journalize the preferred stock and the paid in excess stock. So the preferred stock, if we look at the information over here, preferred stock, the par value was $108. So to figure out the amount that we will credit to the preferred stock, we take 8,000 and we multiply that by the 108. That was the par value. That gives us a balance of $864,000 that is credited to the preferred stock account. The paid in excess is the difference between what we receive and what the par value was. So in this case, that's $111 subtract $108 to come up with a difference of $3. So we multiply the 8,000 shares by the $3 difference to come up with the paid in excess of par value for that preferred stock. In this case, it's $24,000. If you're concerned about your numbers and making sure that they're correct, if you take and add the paid in capital in excess of par value plus the preferred stock, the sum of that should equal the amount of cash that you debited into the cash account. I hope this helps. Thanks.